Wait a couple more seconds for folks to join us. Welcome. For those of you who are just joining us, welcome to our Demystifying Debt webinar. A quick overview of Zoom. If you could please keep yourselves muted so we can give the floor to our speakers tonight. Please feel free to use the captions if you need some closed captioning. And for question and answer tonight, we will be utilizing the chat and the Q&A feature. So if you have a question that you want answered at some point tonight, either place it in the Q&A and our facilitators will see it, or in the chat as well. So thank you so much. I am Kelly Henwood with the WSU Regional Small Farms Program with Extension, and I'm based in Jefferson County, and happy to partner with the NODC on the last series. And just a reminder to mute yourselves. Thank you so much. Elise, over to you.
Hi there, I am Elise Wright with the North Olympic Development Council. I am the project coordinator for the Farm and Food Business Advising Program. So I'm going to briefly share my screen. I only have a couple slides before we get to our presenters. So should be, all right, should be sharing. Can you see it? Yes. Okay, great. So again, this is Demystifying Debt. Our overarching goal for today's series of presenters is that you walk away feeling empowered to start the loan process and take on smart debt in order to scale and grow your business. We want you to feel like you know where to turn in order to get the assistance you need to start that process, and who you might reach out to ask questions and get the resources. So again, knowing that you have us at NODC, you have your local EDCs, you have the Small Business Development Center, you have the Center for Inclusive Entrepreneurship. So there are a lot of entities that are here to support you. We are all invested in your success. So please just reach out to us and we can help you get this process started. If you know someone at one entity, we all know each other, we all talk to each other. So if you know one person at one place, reach out to them. If they aren't the appropriate person, they will put you in touch with the appropriate person. So don't let yourself get intimidated and feeling like you don't know. That's totally fine. Just reach out to us and we will help you out. Today's speakers, we're really happy to have a great lineup of speakers this evening and super thankful to them for sharing their time. We have Steve King with the Washington State FSA, Jessica Harper with AgWest Farm Credit, Dr. Case Kolf, who is a member of Lion, which is the local investing opportunities network that serves Jefferson County. If you are in Clallam County, do know that there is also Clallam Opportunity Investing Network, which is COIN, and also Local Dollars and Cents, and those two are very closely linked. And I do have a point of contact and more information on that I will share out with you as part of the resources we will share with you after today's workshop. And we will be finishing with Karen Williams, who is the owner of Red Dog Farm. So format, so each speaker is going to speak for about 10 minutes. So if you do the math, that's not a lot of time. We've got a lot to pack in before 7:30. So again, as Kelly said, we're going to hold Q&A until the end. So use the chat feature or Q&A to populate your questions, or you can come off mute at the end and ask directly. If for any reason we run out of time and you can't get your question answered, we'll either have that in the chat or just email Kelly or I, and we will make sure that your question gets answered. If there's any time at the end, we will ask you to take a couple moments to fill out the evaluation. You should have received a link when you registered for the webinar. And if you don't have time to get to that today, please do take a moment within the next day. We know you're super busy. But if you can take a couple minutes to fill that out, it's really important and impactful. It helps us make sure that we are delivering content that is important to you and valuable to you in ways that are accessible to you. So we really appreciate it if you take that time to do that. Without further ado, I'm going to stop sharing my screen and pass it over. Oh, one sec. And I'm going to pass it to our first speaker, who is Steve King with FSA.
Okay, thank you, Lise. I will hop in and see if I can get my screen shared here. Okay, just a second. Okay. All right, so do you all have the slide showing up, hopefully? I hope.
I'm not seeing it yet.
Okay, let's look at screen. Okay, how about now?
Yep.
Is that better? Okay, great. So thank you all for calling in, and thank you especially Elise for the invite. We appreciate being part of this discussion tonight. So my goal is not to necessarily tell you all about what Farm Service Agency has to offer tonight. It's more just to talk about borrowing in general. And so we'll do the best to get the most out of our 10 minutes here and jump right in. So looking at, well, is it not? Okay. So let's just start with just some initial thinking about borrowing, how to approach it. A lot of people, when they think about borrowing, it could make them a little bit nervous, and I totally get that. And frankly, rightly so. Loans need to be repaid. You don't want to be over eager necessarily to jump in and borrow money, because we all know that that's all got to get paid back eventually. But it can be done for the right reasons. You don't want to take on debt unnecessarily, but there are certain times where it really does make sense. So I wanted to, let's just talk a little bit about how that might look for farming in general, ag in general, and hopefully you can bring it home to your own operation. Nobody really wants to have a loan go bad, and that includes us as lenders. None of us want to have a loan go bad either. So we work, as lenders, we work to evaluate the situation by understanding risk or by evaluating a customer's risk. And the risk really goes both ways. You as a customer would obviously feel it just because there's the risk of what happens if things cannot be repaid as planned. In the lending world, we would look at it risk as more of a financial risk. How does this fit into our overall scheme of just overall risk in the portfolio and everything else that goes into that. So yes, it definitely goes both ways. And when a lender looks at your application, that's one of the main things they're doing, is trying to determine, is this an acceptable level of risk that we would want to take on? Risk, is not necessarily a bad thing. Risk creates rewards if it's done properly, done for the right reasons. So it's not a bad thing. It's just something that needs to be considered carefully as we get into the borrowing world, in the lending world. So let's take a look at what could be some good, sound reasons to jump in and decide to take that risk on. First and foremost, we really like to see any new debt serving a productive purpose. One of the more common ways that we would see that happening, at least where I work, is short-term capital to get you through to harvest, to provide for operating needs. And where I am here in Spokane, oftentimes that is money to get through until fall, when crops are harvested and sold. Depending on your operation, your income stream might not look quite like that. You may have more regular income if you're growing short-term crops, selling them throughout the summer, that could be a little different. But that's just one of the examples of one of the ways that we see that happening. The productive purpose there obviously is producing the crop and getting that to the point where it can be sold, and then the loan would be paid back. Other possibilities, looking beyond just short-term credit for working capital, could be expansion into an enterprise that you are familiar with. One of the things to watch out for there is just, as lenders, we look for going into, like I said, a known enterprise, something that you're already intimately familiar with. You know kind of how the game is played. You know how to raise a good crop. You know how to take it to market. You would just like to be able to expand that. So an excellent example of that, they gave us the permission to use them here, and this is a customer that we worked with here in Washington named Lone Crow Ranch. And they're first generation farmers. They had the idea to start raising and selling direct to consumer beef finished right there on the farm. And they started out basically by selling their car, and they bought a few cows, and that's how they kind of got their foot in the door. Once they had figured out that they enjoyed it, they learned the ropes of how to actually run the ranch and do it well. They came to us, and we were able to help them, grow the herd even a little bit more beyond that. And they continued to expand, purchase some land, and now they're at the point where they've got a building going to process their own meat versus hiring a custom butcher. They're well on their way to having a pretty successful enterprise. Their website tells you a lot of their story, so we've got that there that folks can go and take a look at. But again, that was a good example, or a good just a good example on our end of someone that started small, which can be really key to getting your knowledge base built, is that start small, make sure it's something that you want to commit your life, your career to, and grow from there. So other possibilities besides, expanding numbers and growing your enterprise could be just looking at different ways to market what you're already raising. Maybe not necessarily raising more, but an example would be a customer that I worked with years ago here in the Spokane area that had an orchard close to town, and they had the opportunity to sell cider into their local market, the supermarkets here around Spokane, but they didn't really have a way to produce as much as it would take to have that kind of a market. They had done some cider in the past with a borrowed press from one of the neighboring farms and just sold it right there on the farm. But they came to us, we were able to help them install a press of their own to increase that capacity, along with the bottling equipment and UV to deal with any bacteria that would be in the juice. Over years, they were able to expand beyond just selling it there on the farm, but moving into the grocery stores here around Spokane as well. So again, a way to productively expand what they were doing and open up some new doors there for marketing opportunities. Another productive way or good way to look at lending could be reducing cost. If looking at things like machinery, buying versus renting, or buying versus repairing. An example of that could be, we had a customer years ago that always got sticker shock when they looked at a combine. Very expensive piece of machinery. So instead they ran 6 old combines that were quite old. They would get them all in running condition before harvest and take off through harvest with one of the combines until it broke. And then they would jump on the next one, start it up and run that one until it broke down, and then jump on the next one and so forth down, because kind of a chain of machines, and just hoping that by running through the 6 machines, they would hopefully be able to get to the end of harvest without having all 6 of them break down. They did that. Again, they were not very keen on taking out debt, and they avoided it like the plague. But after about 20 years of that, they did break down, get a different combine, and they never regretted it. I do not think it cost them any more money, frankly, than the cost that it took to keep the other 6 machines running. So there is that aspect as well. So those are examples of some good reasons that could come your way to take on debt, and to start to look or talk with your local lender. So let's take a look at maybe some wrong reasons, which we also see from time to time. Wrong reasons would tend to be more reactionary, whereas the stuff we looked at before was more of a proactive approach, in trying to expand, trying to save costs, etc. Wrong reasons could be failing to consider the long-term costs. So example here, again, real life customer that we worked with that had a tractor that wasn't new, but still had a lot of life left in it. And they were going through their hayfield one day down close to a creek where there happened to be a fair population of gophers. And as they went over the top of a gopher den that they didn't realize was there, the ground gave way under the heavy tractor. Down the tractor went, and tractors don't like to bounce. And when it came down, it broke one of the axles. So $10,000 repair to get the axle replaced. When they took the tractor in to get it repaired, the dealership did a good job of selling them on the point that, you know, for $10,000, you can just make a down payment on this new tractor and it won't cost you any more money. And so that was what he decided to do. Unfortunately, that fails to take into account the long-term consequences of borrowing. And that is that it's $10,000, not just this year, but next year and the year after and the year after, and so on. And it turned out to be more of a monkey around his neck than a benefit. If we had just kept the other tractor going. So lesson learned on their part, and hopefully, you know, a lesson learned for the rest of us as well. So other things that we have seen, or at least that I've seen over the years, is folks that get fixated on just one thing that they've got to have. Case in point was somebody that would pull up to the office in a brand new pickup, you know, $80,000 1-ton pickup with the bells and whistles and everything that they need to haul that load of hay. Well, there's other trucks that can haul hay just fine for quite a bit less. And unfortunately, we watched that customer struggle to make pretty substantial payments on that truck for several years. We made, as you know, as farm service agency where I work, we may digress a little bit from the other lenders out there, that there are some that would want to take a loan on like that just because they want the interest. A good lender is going to work with you to determine whether or not that lovely new truck is really a viable option or a wise option for you at the point in your operation or not. Hopefully everyone eventually gets to the point where the $80,000 truck is not a problem, but for these folks and for a lot of beginning farmers, that very well could be a stumbling block. So another reason, or a poor reason, to get into debt is just letting someone else make that decision for you. You get into panic mode. Something that we see from time to time is where you're farming a piece of ground and the landlord has decided to sell. So there instantly the thought is, we have got to get out. We have got to get a loan and buy this property. Why? Because we're farming the property. If we lose the property, we lose the farm, and so on and so on. There is no cure for paying too much for a piece of property or more than you can afford for a piece of property. And sometimes the best decision is to hold up, try to relocate, see if there's other options out there besides just automatically jumping on something because it's for sale, without considering the real cost, the long-term cost. What's this going to do to our pocketbook if we were to make that decision? So we, or you all as business people, as the farmers, need to be the ones that drive the business decisions that affect your operation, versus letting someone else take control of that and causing you to make a snap decision. So last thing I'll mention as far as the wrong reasons is just trying to minimize debt that would not be productive, which could be losses from the past. It could be, overspending in other areas of life, and that accumulates on credit card or other consumer debt. Try to do your best to minimize that. That will chew away at, what should be a profitable, or what could be a profitable operation can quickly become unprofitable. Good example of that from our experience was a customer that did have a very profitable operation. They had built it from the ground up, started with nothing, a piece of bare ground, and turned it into a very profitable nursery operation that was shipping plants all over the Western US, until something happened called a divorce. And joint ownership of assets, 50-50. There was a lot of equity in the farm. And that was, anyway, talk about unproductive debt. That's exactly what that was, is they had to pay out, the other spouse's share, 50% of several $100,000. And it eventually was one of the things that ended up sinking the farm, unfortunately, after 7 or 8 years. They just could not keep that up. So unfortunately, it was a sad lesson learned for everyone. But again, just try to, do your best to minimize debt that has not been taken on for some sort of a productive purpose. So you get to the point where you've decided, all right, I've got a bona fide, decent, good reason here to go apply for a loan. What should we do to prepare for that? First thing would be to establish, as best as you can, a profitable track record, or a track record. Start small with your experience. Think back to the Lone Crow Ranch example, where they started very small with about 5 cows and built it from there. Show that you've got the experience to know what you're doing there on the farm. Keep a good credit history. All lenders are going to look at that. Start to show a profit financially. Don't get too fixated on showing a loss to avoid paying taxes. Showing a little bit of a profit is a good thing, from a lending standpoint. So be willing to accept some of that risk, versus expecting the lender to take it all on. We'd like to see the customer have a little bit of skin in the game, as you might say. And then do understand that whenever you apply to borrow, a lender is going to have collateral to secure the loan. Usually the asset that's being purchased, or it could be crops, or it could be, who knows, titles to vehicles, etc. But whoever it is, they will have to be secured. So give yourself plenty of time and apply early. Farm loans are like business loans, and they're a different animal compared to, say, applying for a car loan or a house loan. They do take more time typically to process. And yes, so be prepared for that. And it will help if you come in with a good set of financials behind you. The history laid out of the farm, a balance sheet, income and expenses, etc. All those things will help. So if you would like more information on our loan programs for beginning farmers and other farmers, loans for land, equipment, operating money, there's a lot of good information out there on the web at the agency's website, fsa.usda.gov, and you can navigate from there to the farm loan programs. We've got the link here in the slides, which can be shared by Elise if you like. And our contact for the peninsula is our Chehalis office. We have a new loan officer there right now who's in the middle of training, but she's eager to help folks and would be glad to talk to you. You can see her information there on the screen as well. And she covers all of the North Olympic area there out of Chehalis. So anyway, I will wait for questions until the end. So with that, I'll stop sharing and let the next person in. Thank you.
Thank you so much, Steve. That was great. Really appreciate it. We're going to move right along, jumping into Jessica Harper with Ag West.
Thank you. I'll share my screen. All right, we'll take it from the top here. So, well, I want to share, I'm on 2 screens, so bear with me for just a moment. All right, here we go. So I am with Ag West Farm Credit, and as I mentioned earlier, I'm with in Spokane, Washington. That's where our headquarters office is located. And for those of you that might not know, Ag West is a cooperative. We're a financial services institution. So essentially, we're a lender, but we focus strictly on farmers, ranchers, folks that raise timber, and also our aquatic producers throughout the West. And I say the West because we actually had a merger with Farm Credit West, who operates in parts of California and Arizona. And so I'm previously was on the Northwest Farm Credit side, for those of you that might be familiar with that name, but now we really serve producers from Alaska to Arizona. So for those of you, just kind of a quick update who aren't familiar with what the farm credit system is, Ag West covers a part of the farm credit system in the West, but there's actually a farm credit association in every state in the nation. There's a number of different territories that you could work with and whatnot. We're not a governmental agency. We're just part of a nationwide network of farm credit, ag focused lenders. So I think that's important because we are also a cooperative. And so that means that we're really, our mission is to serve farmers, and the people that vote every year and tell us how to lead the organization are all farmers and ranchers. And so the decisions that we make are really long-term and not based on, other objectives like, corporate dividends or things like that. So we've been doing this for a long time, but I'm really proud to say that we've enhanced a lot of the ways that we do lending at Ag West, especially when it comes to our young, beginning, and small farmers through the program that I lead called Ag Vision, which I'm going to get into. So I talked a little bit about the coverage area, but here's essentially a map. And if you look at Washington in particular, we've got an office in Chehalis and Seattle. As I mentioned, I'm here in Spokane, but we've got folks in every one of these offices that focus on Ag Vision. And then I'm responsible for the program across the company. And in terms of what we offer, I want to kind of get through this stuff so we can talk about some success stories that we've seen with other farmers and ranchers that we work with. But basically, we're a full service lender, and we also offer crop insurance. So real estate financing, whether you want to buy a bare piece of ground that's farm ground or a piece of farm ground that's got a house on it, we can help you with that. We also have operating lines of credit, which Steve talked about a little bit, so I won't belabor that, but that's just basically your amount of money that we would work with you to put together based on your cash flow budget. We also do equipment financing. We finance cattle, livestock, poultry, things like that, as well as crops. We've got an internal appraisal team, which is really nice because that can help speed up lending processes when we need to, especially when there's a piece of real estate that's on the market and you want to get that taken off of the market. Having an internal appraisal team can really help. And then we offer a lot of financial training too. But the program that I really want to talk about specifically is bolded here, financing and education for young, beginning, and small producers. And that's under our Ag Vision umbrella. So when I talk about young, beginning, and small, we've actually, it's a really neat part of being a part of the farm credit system. We've got a mission to help build up this group of farmers and make sure that we've got a future generation of farmers that are alive and well and successful and have thriving businesses that they're going to sustain for years and years. It just makes good business sense. So the definition of what we call YBS is a farmer who is one of these categories. So we have people that are Ag Vision customers for life based on the size of their operation relative to their gross farm income. But young is if you are 35 years of age or less. Beginning is if you've not been farming in a professional management capacity, managing your own farm or ranch for more than 10 years, then you qualify as a beginning farmer. That kind of matches the USDA guidelines for beginning. And then small is annual gross farm earnings, as I mentioned, of less than $350,000. So as long as you meet one of those three criteria, you are eligible for a whole suite of benefits under this Ag Vision umbrella that other producers who don't meet any of these three criteria don't qualify for, because we recognize that there are unique barriers to entry when you are beginning small. So just to provide a quick overview here of, people say, all right, what do I get, right? What is Ag Vision all about? So this is just a summary of all of the different things that a person who works with us is eligible for. But I will have the caveat here that this new producer grant on the left, actually this closed on Friday. We had a whole bunch of people that applied for our new producer grant. And the intent there was that we recognize that there are our earliest stage beginning farmers who have not more than 2 years of farm management experience, who really have a gap in being able to obtain funding to get started. And we want to help them get started by providing a $15,000 grant for some kind of a capital purchase, or something big that's going to help launch their business. So that's not for customers. That's really just a way for us to help that next generation. And the application process, in a very light way, kind of follows actually a lending experience, which helps frames up their expectations related to what it might be like later on to get a loan. We do a lot of outreach, which includes going to conferences, serving on panels, working with incubator farms through our dedicated team of Ag Vision ambassadors and Ag Vision leads. So as I mentioned, every branch that we have in our association has got somebody dedicated to Ag Vision. The Thrive product suite is actually new. We had as Northwest Farm Credit had a previous product called Jumpstart, but Thrive is our Ag West product, and it's actually better because it's got 3 different loan options that you can participate with. It's got a $225,000 threshold to it because it's very generous in the underwriting guidelines. It's our probably most open opportunity to receive funding for those startup producers, with either a $75,000 operating line, an amortizing term loan up to 5 years. And what we mean by that is you can actually help utilize that for some down payment assistance on either a farm real estate purchase or equipment. And then also we have a startup capital term loan, which is where someone that's in, again, the early stages can have an interest only option for up to 5 years. We have higher advance rates with that as well, just to help people get going. And as I mentioned, flexible underwriting eligibility. As an example, we don't expect a young person that is just getting started to have a balance sheet that looks like someone who's been farming for many, many years. They're younger. They haven't had the amount of time to build up their equity. Their cash on hand is less. They have less experience, etc. So for that reason, we have financial ratios that are reduced to help demonstrate that we understand the just getting going perspective. Then in terms of loan program benefits outside of the Thrive product suite, all of our other loan options within Ag Vision that don't have this $225,000, there is no cap on the loan limit, have got preferred interest rates. So while we're not the FSA, our interest rates are significantly lower for this group of borrowers if you're young, beginning, or small. Similarly, we have modified underwriting guidelines. We will pay the FSA guarantee fee for an Ag Vision customer, which is huge. I was just looking at one yesterday on a report, or I guess it'd be Friday, and it was $29,000. It's a formula on how much that fee is. It is depending upon a number of factors, but it was a big fee, and a lot of lenders do not do that. We paid that for that customer because we wanted to help them get started. We'll also offer up to $1,000 for technology and education reimbursement benefits. If I'm working with a new customer and their computer dies on them, we don't want them to have to spend $1,000 to buy a new computer on their credit card if they just put their down payment, to help get their farm going. So we'll reimburse them up to $1,000 to help with the technology expense. And it's for a lot of things other than computers. Gosh, we've got Wi-Fi and drones and security cameras and a lot of different things. And so lastly, over here, this is the education category. And so we have a whole business management center that's focused on customer education. We've got 2 dedicated events for new producers and what we call a next gen producer. So that's a farmer who might be part of a succession plan. there's kind of a different track because their needs are different based on if they're a first-time farmer. Maybe it's going to focus more on marketing and financials, direct to consumer types of things, where if it's the Next Gen Summit, some of those tracks might have things like estate planning, tax considerations, governance. So those are expenses paid, deep dives in education. And then lastly, Steve again talked a little bit about coming prepared with some financials when you visit a lender. We understand if folks are just getting started and they're like, I don't know how to do a cash flow budget. That is totally fine. And we're happy to teach people how to do that. We've also on our website in both English and Spanish have got a 1-hour webinar for income statement, cash flow budget, and balance sheet. So you can go on there on your phone or on the computer. You can download an Excel sheet or a Word document actually for a balance sheet and learn in the privacy of your own home how to do all three of those. You can rewind it, start it, it's on demand. And so you get a comfort level of what those three documents are so that when you are ready to talk about considering some debt to help grow your business, you've had at least a little bit of a prelude into what those documents are. We've got a program called RateWise, which is really for earning interest rate reductions for classes like this. Actually, if you sign up, you do not need to be a customer. For every hour of external education that you take, you earn credits, and then you can cash those credits in over time. I want to get to some quick success stories and then and turn it over to the next person. But just a couple of examples of people that we've been working with that I think really are good examples of Ag Vision working for the positive. We have, in the last 6 years or so, been working with an urban farm in Eastern Washington that was a husband and wife team. They worked really hard for 3 years on a commercial vegetable operation, so they became really good farmers at a low cost of entry because they worked for somebody else. And then once they knew they had the production down, they were ready to start their own farm here in Spokane. But they needed a high tunnel, and they really didn't like the idea of taking on debt. So we helped them with the Jumpstart program, which is like that Thrive loan that I talked about. And now they serve multiple restaurants. They work in 3 farmers markets. They've got a wholesale account, and they're both fully self-employed on this operation. But they started small, and they learned how to farm really well before they dove in and took on any new debt. This operation is actually in Western Washington. I'm really very proud of them and proud to know them. They started on a small incubator farm, and after just a couple of years, the woman that we were working with was such a good marketer, really deeply involved in community food systems, and she took that passion and she applied it at her farm. They actually started wholesale. They worked through the steps of becoming certified organic. They've got very good sized CSA program that they run right now, and a year-round on-site farm stand. And the husband, he recently just was able to quit his job and start working full-time. We worked with the Farm Service Agency on joint financing and also provided them with an FSA guarantee. So a partner loan, we're a preferred lender with the FSA, and that is a wonderful program because we can blend our interest rates to really bring that overall interest rate amount down. And we also have got fee waivers for appraisal and origination that can help, again, save expenses for you. So FSA, when you have met the minimum threshold for eligibility, which is 3 years of professional farm management experience, unless you're a veteran or have a degree, that number can be less. But FSA joint financing is a wonderful program. And then my last is a really neat operation in Western Oregon. They're 100% pasture poultry is what they really started with. They had 2,000 chickens on 5 acres. They approached us for a very small operating line request. Same thing, did not want to take on any new debt, but he knew that not having some supplies and being able to expand his mobile chicken tractors he had more sales than he could have production for. So he approached us. It's like, gosh, I just need a little bit to get started. He shared his business plan. Thrive does require a thorough business plan, which any farmer should have one of those anyway. And we helped him with that, and he's really influential in the regenerative farming space. So he he's just a really good example of a young and beginning farmer that's on his way to really turning into something big. But he's had the vision and he had a good plan. He just needed a little bit of help to get started. So the last thing I want to say here is that, you know, when I think about these three groups of customers, and we've got a lot of examples, I didn't have to think very hard to come up with these three, but they had a lot of things in common. Number one is they all had farmed either at a like an incubator farm or another well-established farmer before they dove in and said, I'm just going to take on a bunch of debt and start something. They knew that they were in this for the long haul. And so that gave us a lot of assurance that they were committed. They all had thorough business plans. Agplan.com has got a wonderful program that's free to create a very professional business plan. And it's got all these tutorials and examples on the bottom. It's with the Center for Farm Financial Management. They kind of like to geek out on spreadsheets because they want to know where their money is going and if they're making money, because they want to be sustainable. So they're not scared of taking the time to learn their how to keep their records and understand a balance sheet and things like that. They all were not thrilled with the idea of debt, but they knew that they had to grow and that they were going to need a little bit of money to kickstart them. They'd identified some proven sales channels, so they already knew that they had customers. They all started small. They didn't want to bite off more than they could chew. And that kind of follows with Lone Crow too. We're familiar with that operation and doing a really terrific job in the same way, just kind of starting small, testing things out, getting things figured out while it's a lower risk and then growing. They had multiple income streams, so they were able to diversify. They identified their niche. They knew what they wanted to do specifically, and they went there instead of trying to be a kind of selling, you know, tomatoes like everyone else. They found their specific niche, and then they're dedicated to long-term success. So I'll just go ahead and stop there in the essence of time. Thank you.
Thank you so much. We're going to jump straight into Stephanie with Craft 3. And just to keep us on track, I will pop in at 10 minutes, just so you know, going forward, Stephanie, in case, just give you a time check. But I'll hand it over to you.
Great. I'll try to be concise. Let me share. Great. You guys can see that okay? Great. So yeah, nice to meet you all. My name is Stephanie Lockman. I'm a business lender at Craft 3. I use she, her pronouns, and I'm based out of Seattle, but Craft 3 is a community development financial institution, and we lend all over Oregon and Washington is our focus area. So we are a CDFI, which means that we're not a bank. We don't have depository funds, but we are able to lend out in mission-focused work to support entrepreneurs and as well as consumer loans. As you can see, we have offices and lenders and present all over Oregon and Washington. And we've been around since 1994 and invested in entrepreneurs, nonprofits, and individuals. So we're not, unlike the other presenters you guys saw, we're not specifically focused on farming operations. So I'm going to talk generally about small business, but I think it really pertains to what Steve and Jessica have said, and I definitely echo a lot of their points. So we lend money to businesses, organizations, so nonprofits as well that can't qualify for traditional financing, and they may fit into one of these criteria. So maybe they have a great business, strong history, but personal credit has had some. They don't qualify for a bank loan because of their personal credit. And then again, to echo what Steve was saying, like, knowing your personal credit is super important when you go to apply for a loan. Maybe they have limited or no collateral, incomplete financials. We can look at real estate loans, startups, entrepreneurs who only have ITINs, and then bridge financing for nonprofits. Our loans are divided between our small loans, so 50,000 to 250,000, and then we can go from 250,000 up to 4 million. And for real estate loans, we can look at loans that have a higher, less equity investment. We also offer committed to help Spanish-speaking entrepreneurs. So we have Spanish-speaking lenders. We also have a small team of business services that help potential borrowers with their business plan or their financials, and we have Spanish-speaking services in that area too, as well as Spanish-speaking language educational content. But we don't offer applications or loan documents in Spanish, but we do have lenders that can help somebody. I'm going to touch briefly on our loan readiness guide, and you can take a picture of this QR code with your phone to get access to it to our website, or I think Elise is going to share it out later. But I think this is a super great resource that we have developed that can be used by anyone for any kind of loan, not just a loan with Craft 3. It's generally talking about what financial statements that everyone has mentioned was going to be required, what a lender will ask you, what advice. I mean, Steve had great advice about like starting small and asking for what you need and not asking for a large loan that doesn't have, that you can't explain what that money is going to be towards. So just kind of a guide to help you out with that process. And in that guide, we kind of talk about your business journey. Maybe you've started, you're pretty early, you have a business plan, you formed a legal entity, but you have a space, but maybe you don't have financial statements or bookkeeping where you can't get a traditional loan. And so kind of understanding where you are in that journey and what loan is going to be a good fit for you. We always, remind borrowers, and especially like you guys have a great opportunity here to ask us questions. You guys are the client. And so if you aren't feeling comfortable with a lender or you're not sure that they understand your business, we always, it's your role to shop around and be comfortable with who you're working with. So you're the client. So please be sure that a borrower understands or a lender understands your business and that you're asking them to clarify if there's information you don't understand. And then kind of a matrix that I think is helpful to look at with debt financing, what is going to be the lowest interest rate and maybe the lowest risk tolerance. CDFIs are kind of in the middle because we don't have depository funds. Our interest rates are traditionally a little bit higher than a bank, but we can take a lot more risk. And then, all of us here are trying to avoid any business owner to get a predatory loan. So we want to give you lots of options, and there's lots of tools today that I think help you find those loans that really fit your needs. And then some of this information has been touched upon. What is the repayment? What are lenders looking for? They're looking for their loan to be repaid. So what is your capacity? What's your personal experience with this in your industry with farming, or who do you have on your team to help you reach those cash flows? And you have some skin in the game? Have you put some money towards this? Are you coachable? Are you willing to listen to some advice that we may have or guidance? And then collateral, as a nonprofit lender, we have more flexibility, but it's still something we'll look at. And then market conditions, what's the demand for this product that you're growing? Is there a lot of other people doing that? We want you to understand that aspect as well. So as a nonprofit lender, our mission is to build thriving, just, and empowered communities through capital. And so, we want you to get the resources you need. We're not trying to close as many loans that we can. We're trying to get you the best fit for your business and have lots of information. And I definitely would urge you to look through that loan readiness guide. That'd be a great resource. So I'm going to talk about a few loans that we have done, and this is by no means all of the loans that we've done to farmers, but just a few that we've highlighted on our website that you can look at. Our website's also a great resource to look at rates, terms that we have in our loans too. So this was a real estate loan to bridge for the Black Oregon Land Trust to purchase real estate to start a training and teaching program for agriculture in the Portland area, just outside of Portland in Oregon. And so, we were able to help them with that real estate purchase. And they were bridging, they were going to raise money further along, but they found this great land, so we were able to help them with that purchase. Might not be a similar model to what people on this call are doing, but it's just kind of to show that we can do larger loans as well as small loans for startups. So we also helped this farm. It was a small loan under 60,000. They were purchasing or getting a lease for a warehouse to grow microgreens, dehydrated fruits, herbs, and mushrooms. And they reached out to us. We helped them, connect them with some technical assistance help. And then they got their business plan figured out. And just with this small loan, they've able to double their accounts. They are in the central Washington area, have expanded, added wholesale, and then actually they graduated from Craft 3 and actually got an FSA loan to buy 14 acres of their own land with a greenhouse. So this is an ideal situation for Craft 3 because they started out with a really small loan, this good idea, and scaled it like Steve was saying, and they were able to then graduate to a better product and a better fit for them, probably a better rate. And so seeing those businesses grow is our end goal. And then the last one was a similar startup or early stage farming business growing saffron. And she actually got USDA grants that covered some of the things that she needed, like equipment and some inventory, but needed some more money to get things started. And so we were able to provide her with a small working capital loan around 50,000. And she was then able to get things started, and we were able to help her along the way. Very cool story. You can read more about these on our website. And I also urge you to check out kind of the terms of our loans there as well. So that's me. Feel free to contact me directly if you have any questions. And I've added another QR code for our loan readiness guide.
Awesome. Thank you, Stephanie. And I will say I looked through that loan readiness guide, and it is a fantastic resource. Very, very thorough and well put together. So encourage anyone to check that out further. Thank you. I'll go ahead and hand it over to Case with Lion.
Great. Thank you very much. Fascinating presentations here. Love it. So trying to get my screen. Can people see that? All right. I apologize that this slideshow has its own built-in timer. So I'm going to try to control it a little bit as we go along, but it may sneak out ahead of us. Anyway, I am located in Port Townsend and am with the East Jefferson County Local Investing Opportunities Network. We are a network of East Jefferson County residents who want to invest our money locally to help build more prosperous, resilient, and sustainable local economy. Started way back more than 10 years ago as inspired by the Local Transition Initiative and Local 2020. And that got ahead of me. We're not an organization. We do not pool investment funds or make collective decisions or give advice. We're essentially a dating service connecting potential investors with people who are looking for an investment or loan in order to start or grow their businesses. Entrepreneurs who are seeking a business loan submit a business opportunity form online. And we also now have a track for homeowners who are seeking to build affordable housing. And they can also fill out a different online form. And then once two or more lenders, Lion members, are potentially interested in a presentation from someone who is applying for a loan, we schedule a presentation, but members can contact business owners or homeowners directly at any time during the process. See if I can get things to move forward here. So since 2006, we have lent over $13 million locally by 53 Lion members, making 365 individual investments, supporting more than 112 entities, creating more than 450 full or part-time jobs. So it's a significant boost to our small local economy. And the vast majority of these investments are under $20,000 each, and 35% are under $10,000. So these are mostly small loans, but some of them can get quite large. I think the largest one is $475,000. And let's see here. So we've contributed to a whole variety of different businesses in the community. You can see here that the largest group is food and farm, 23%, followed by tourism and retail. And for the local food system, we have put $4.7 million into that through 129 different investments in more than 24 farm and food businesses. So as I said, a quarter of Lion member loans are really to the local food system. Some of our success stories. Finn River is probably one of the most popular and commonly mentioned. Whoops, going too fast there. Sorry. I think most people have probably heard about Finn River in the local area, and we've had multiple loans to different ventures at Finn River. Of course, farmers and everyone else need coffee to do their work. We've also invested in Sunrise Coffee. And another local farm success story is the success story of Spring Rain Farm and Orchard. And I won't mention anything about Red Dog because they're on the program very soon. Affordable workforce housing has become a huge barrier to local farms and other businesses. So we, as Lion members, have become involved in helping support that through ADUs, room rentals, tiny homes, and now tiny houses on wheels, and other local housing partners and sources of support are the Housing Solutions Network in Jefferson County and Community Build, particularly for tiny houses on wheels, which have now been permitted both in the county and in the city of Port Townsend. Another very important and new workforce housing opportunity. Here's an example of one workforce ADU out in Jefferson County by a person who worked at Finn River who wanted to support more local farmers and workers in the food industry. And here is a very exciting recent development. This is the first workforce housing tiny house on wheels that was built in collaboration with Community Build. It's a $40,000 tiny home for the person who now owns this tiny house, and Lion was instrumental in providing the loan to make that possible. And then here are some local resources. First of all, our website, Local Investing Opportunities Network. Then the local, let's see if I can go back to that. The Local Investing Resource Center, which is another excellent resource for people who are looking for assistance. And finally, in Jefferson County, Economic Development Council. Well, I guess the speed of my PowerPoint automatically kept me under 10 minutes, so I'm happy to turn it over to Karen from Red Dog Farm.
Yeah, awesome. Thank you, Case, and thank you just on behalf of our community for all that you and Lion are doing for us. But yeah, Karen, you're up.
Okay. Can you see me?
I have to stop screen sharing. There we
Okay.
go. There you go.
Okay, great. Let's see. Okay. Just give me a minute when I figure this out here.
And Karen, this is Kelly. I'm more than happy to support and
Okay.
if you need, but you let me know.
Okay, thank you. We'll see. Let's see, can anyone see that?
Yeah.
Okay.
So if you scroll up and go to the first slide, and then do you
Okay.
want to do in like a slideshow?
Sure. Slideshow. How do I do that?
You can go up at the top under,
Hmm.
yeah, go to the right until you hit slideshow.
Oh, okay. Oh, I see it. Okay.
There it is, yeah.
Um,
And then from beginning, you just
okay, great. Okay, well, hello, I'm Karen Williams. I'm the owner of Red Dog Farm in Chimacum. I just have a few photos that I threw up here, so this one's a more interesting one. So we're going to be looking at some of these photos for a while. I want to start with my background. So I started farming in, let's see, 1998, and I worked on a variety of other people's farms and woofing and volunteering and livestock farms and vegetable farms, and really spent a lot of time trying to figure out what kind of farming I wanted to do. And also in that process, do I even want to do farming? I also have a degree from Evergreen State College in agriculture, and and have since then worked on a bunch of other farms. I was lucky enough to be able to start Red Dog Farm in 2008, and we currently grow 23 acres of mixed organic vegetables, berries, plant starts, and tulips. We sell at 2 local farmers markets. We have a CSA program, around 130 members. We sell to local stores and restaurants and other institutions, and we have an on-site year-round farm stand as well. Today I just sort of wanted to tell the story of my borrowing and my debt of on the farm here at Red Dog. I did have some experience with I did lease another piece of property before I started Red Dog, just down in Quilcene, and I did have an operating line of credit with AgWest for 2 years with that project. So before I even started Red Dog, I did have some experience managing debt and budgeting and all of that kind of thing. So that was really helpful before, like someone mentioned earlier, having some experience starting small, that was really key for me to sort of test the waters and see, is this something I really want to commit my life to and take on a large amount of debt for? Let's see. So when I started Red Dog, there was so much startup cost. There was the cost of the land. There was all the infrastructure, equipment, as well as operating costs. This picture you see here is somewhat of a current picture, but when I first moved onto the land, it was just a hayfield. There was nothing there. There was no electrical service, no water, no septic, no buildings, no irrigation. There was just nothing. It was just a hayfield. So as you can see it, even in this picture several years ago, it's come a long way. I was lucky enough for the land that I was able to find a bridge owner through the Jefferson Land Trust, and they actually ended up purchasing the property, and we set up a lease to own agreement, so that really delayed my taking on a land mortgage for a couple of years, and that was really essential to getting me started farming. And one of my main tactics is like, what debt can I delay taking on? And so that was really important early on. As far as infrastructure, I was able to wrap pretty much all the utilities installation. So the electric, septic, water, the driveway, all of that, I was able to wrap into that agreement with the Jefferson Land Trust. So that went into the land mortgage essentially. But I still had a lot of critical infrastructure equipment that I needed to purchase right away. The biggest one was I needed some kind of structure. And so I wanted to build a pole barn. I also needed refrigeration for all the produce that I was going to be growing. And I needed some tractors to work up the soil. I needed a delivery truck, greenhouses to start my plants. And then just so many other smaller tools and equipment and just all kinds of things. And then I needed someplace to live as well. So the pole barn, that was my biggest expense early on. The cooler, as much as I wanted a walk-in cooler, I was able to buy some used old dairy trucks, and I had 2 of those that worked for years and years. I bought used tractors. instead of building greenhouses right away, I was able to rent some greenhouses in just a couple miles down the road. So that delayed greenhouse purchases for a couple of years. And then housing, I bought a cheap trailer and I lived in it for 6 years. I was able to secure some funds, quite a few, about $120,000 in funds in the form of promissory notes and just handshake agreements from family members and community members. Those were all low interest rates and people who were really invested in my farm being successful. And so that was really key for me getting started. And those funds are what bought the pole barn, the cooler trucks, the tractors, the delivery truck, and so many of those tools and equipment that I was talking about. I also did a operating line of credit with AgWest, who was Farm Credit Services at that time, and I qualified for the Ag Vision program. And as Jessica was saying earlier, it's such a wonderful program. I really benefited from it. I definitely got a lot of training and one-on-one just information on, what is a balance sheet, what is a cash flow budget, and just working through trying to come up with making sense of financials and figuring out how to navigate that system. In addition, they, just provided so many perks and just a really wonderful program, really helpful. In addition to obviously the funds that were available. Yeah, back in those early days, my farm was on a really tight budget. There was a lot of financial stress. It was hard to make all the payments that I had to make. I was living very frugally. I can remember countless times when, my crew was telling me, oh, there's 6 of us and there's only 5 hoes. And I would say, one of you find something else to do. Like we're not going to buy another hoe right now. Like it was that tight. That worked for me when I was in my 20s, but as I, have gotten older, I've, things have changed and there needs to be more ease in my life. And luckily as the farm grew, that was able to happen. Let's see here. I think I have, let's see, how do I change this? I'm going to go ahead to, yeah. So in, 2010, I was able to purchase the land with FSA program, their Young and Beginning Farmer program. And again, it was just wonderful to work with USDA and FSA on this program. A lot of paperwork, a lot of upfront work on my end, but it was a great process. And the loan officer I was working with, Jeff Peterson, was really dedicated to helping me figure out how I could purchase this land. And I got a 39-year term. The interest was really reasonable. And just because of that long term and the low interest rate, it made it feasible for me to actually purchase this land. One of the things that, because my farmland is right along Chimacum Creek and there's a wetland component to it, the county regulations are such that they changed how close you could build to waterways, I think in around 2009. So I was lucky enough that I had a site permit back when I purchased it long story, but anyway, in 2008, I got a site permit to eventually be able to build a house. And it was really lucky that I did because I was able to be grandfathered in under those previous guidelines. But the catch was that I had to have a building permit a building permit by December of 2012. So in 2012, I had owned the land for just over a year and I had no money and I needed to build a house. I needed to build a house essentially, or I was not going to ever be able to build a house there. It was a very time crunch. So then I went to AgWest and talked with the loan officer that I'd been working with, and he directed me over to their construction and home mortgage loan. And as usual, they were just great to work with. And they extended my eligibility for their Ag Vision program, which made me eligible for a home loan when I wouldn't normally have fit within their parameters of being eligible for loaning on a home. So I was able to build this home. And it was huge to be able to move out of that trailer that I mentioned I lived in for 6 years and to move into this home and start working on sort of a lifelong dream of being able to be not only farming, but also farming in an enjoyable manner and a good livelihood. And as the farm grew, I was able to purchase more equipment and more infrastructure, a lot just with income, little by little, as I was able to increase my income. You know, I'd buy some other piece of equipment or some other thing, but there were definitely some loans that I had to take out because for bigger purchases that I wasn't able to just carry on my own. Let's see if I can, okay, Kelly, how do I exit out of this slideshow?
Let's see.
Escape. Oh, there we go.
There you go.
Okay, great. So some loans I took out. So these are some tractors that, let's see.
You're welcome to just keep it on the slide if you want.
Okay,
Yeah.
maybe I'll just do that. So yeah, originally I bought old tractors. I have some 1980s Massey Fergusons. I have 2 of those, and I have some 2 1960s Farmall Cubs, and then I have a like a 90s Kubota, an orchard tractor. But after a while, you know, those tractors break down a lot. They need a lot of maintenance, and oh, and I did have a tractor with a front end loader, but that tractor it wasn't worth fixing anymore. So I needed to scale up. I needed to get a bigger tractor with more horsepower so that I could use some different implements that I wanted to grow into. And luckily at the time, Kubota Corporation had some great loan deals going. It was like 60 months, 0 interest. And, you know, I took the plunge. Like a lot of people, I am adverse to taking on debt if I had to, and I was shying away from these big fancy tractors, but honestly, it was the best decision that I've ever made, is buying this tractor on the right here. Is what we call our big Kubota, and that was a $47,000 loan in 2016. And then the one on the left is was a $23,000 loan in 2020. And these tractors just enabled us to keep efficiency up. With the forks, we were able to move to more palletized systems, so we could you know, harvest crops onto pallets in the field, move them into the pack shed. From the pack shed, we could use pallet jacks and move things in and out of our coolers. We're also able to offload our own supplies from delivery trucks. Previously, we had either borrowed or rented forklifts or hand unloaded, and it just really increased efficiency by being able to like do all this loading and unloading by ourselves. Let's see, another upgrade that we made was previously we had 2 old dairy cooler trucks. This is one of them, this red one here. And we would have to shuffle produce from our pack shed into these carts or trucks and then into these coolers. And it's just a lot of hand lifting, really hard on people's bodies. And in 2020, it was able to install this walk-in cooler, which was a huge upgrade. This was a loan. This is an intermediary loan or intermediary term loan from AgWest. And this was a $50,000 loan in 2020. And it made all the difference. It really helped us to sync up from being able to use our forks in the field, palletizing things, palletizing in the pack shed, and then into the coolers. And then we also bought a delivery truck with a lift gate. So we were able to just go straight from the cooler into the lift gate. And my employees don't have to be lifting crates and boxes of produce time after time after time. It's really reduced how much the wear and tear on people's bodies and efficiency as well. Let's see. And then we had our pack shed. This is another project that was a loan. This was in 2017, and this was a $20,000 loan, also from AgWest. So you can see this picture on the left. This is just a kind of a side view of our pack shed. Originally, it was a gravel floor. It was really poorly lit. Yeah, it didn't have a drainage system, and it was pretty lacking. And then on the right, this is our upgraded pack shed that we were able to put in, and it has this trench drain. All the water drains down into a trench, into a catch basin, and gets carried away. And we have a way of collecting the mud out of the drain water. The concrete floor is key for being able to pallet jack pallets around. It's also just a lot clean. We can exclude rodents a lot easier. And we put this FRP on the walls, and it just made it a lot more pleasant workplace, and also just safer and more efficient. some of the other funds that I've gotten for the farm also were some grant funding. I've gotten a couple equip grants for greenhouses. I've built 2 of those, and then we have one third grant that we're going to build later this fall. And then we have also gotten a couple different grants, the latest of which was the WSDA Local Food Infrastructure Grant, and we're going to rebuild our farm stand. So I just want to mention that grants, there seem to be more and more grants available all the time, and they're a great way to bring in funds into your farm, especially when you don't have to repay them. With the equip, you do have to pay up front and you get reimbursed, and actually WSDA is the same as well. Yeah, I just wanted to share some thoughts on just on, taking on debt. I feel like taking on debt can be really terrifying. And I think it's really critical to have a solid cash flow budget, and to have the experience to know if what you're planning is realistic, and then also to have the willingness to take on the risk. I just know if I hadn't taken on debt, I couldn't have started my farm, and I couldn't have grown my farm in critical ways that enabled me to be more productive, more profitable, more efficient. And I think I just wanted to share like some of the considerations I think about when I'm determining whether I should take on debt. I ask myself, well, first of all, what do I need, or what do I think I need, and why do I need it? And could I carry on without it, or do I really need it? I like, talking to other farmers and visiting other farms whenever I can. Before I remodeled the pack shed, I visited a ton of farms and looked at their pack sheds and thought about what systems do I want? What do I need? What's really cool, but I don't actually need? How much space do I need this to take, and so forth. The financial projections are so important. Like, how much labor will this save? How much money will this save? How much more productivity can I achieve with this? What are the real like fiscal benefits of this? And as well as drawbacks. How much is it going to cost? How long will it take for me to be able to pay it off? I always like to consider my employees. Will this prevent injuries? Will this reduce injuries? Will my employees be happier and stay working for me for longer? Those are really valuable questions. Retraining employees costs a ton of money, and anytime I can retain really good quality employees, and that's always worth a lot. Yeah, and then of course, if I've decided that, yeah, I do need to make this purchase, I have to decide, what company am I going with, what product, what system, what is it that I am actually going to purchase? How will I finance it? Do I have enough cash so that I can pay for it on my own, or do I need to look for financing? And then lastly, can this purchase wait? Do I really need it right now? Or is this something that could wait? And do I need to do more research, or wait another year so I can pay for more of it out of pocket, things like that. I'd say my approach has been a balance of like commitment to making the farm work, and also taking on debt really carefully, and only when needed. I really, have a value of being frugal, going without, using minimal technology as long as possible, just as long as it makes sense. As my farm has evolved over the past 17 years, the more I just spoke of this, but the more I invest in worker safety, comfort, efficiency, is just resulted in employee retention. And that's just been huge for my success. And I just want to add too, that debt can be really motivating. I feel like it keeps me really sharp to make good decisions and really track my budget. I think those are all skills that have just really served me well in my business, and just knowing that I have to pay back the money, it makes it very real, and really protective of keeping my business successful. So, yeah.
Karen, I realized I accidentally left out the picture of your crew.
Oh, yeah.
Can I share my screen of your crew?
Yeah, please do.
Okay.
While she's doing that, Karen, that was awesome. That was exactly what you're hoping for. You touched on everything that all of our other presenters were talking about. And I love that you brought up the health and well-being of your crew. That's super important to be thinking about long-term.
Yeah. Thank you.
And there they are.
Yeah, there's the crew. That's last year's crew. And yeah, we have a good time. And yeah, a great bunch of people.
Yeah, fantastic. With that, we will, yeah, we're at 7:20. Great timing. Thank you, everyone. And if anyone, there's been like couple chat questions in the chat, but if anyone has questions right now and wants to unmute themselves, you can ask directly or you can pop them in the chat. Yeah, we'll just give it an awkward moment of silence in case anyone has anything they want to ask.
I have
And
a
if not,
question, Elise.
yeah.
I have maybe a question for Case. Ronnie Smith asked a great question about the Lion local investing, if it was specific to Jefferson County, and yes, it is. And as Elise mentioned, there are resources in Clallam County, but are you aware of any other developments around the Kitsap County area or Washington State or beyond for some farmers who aren't within that service area?
I believe there's a group in Whatcom County that has been trying to do some of this. I'm not sure what the latest is with them. And I think there's also a group out of Anacortes that's looking at Island County, that area. I don't know if anything else. So I'm not sure, but we could certainly check that and let Elise know, and she could get that out to folks.
Absolutely. Yeah. And Ronnie, as Kelly mentioned in the chat too, like we can reach out to our contacts in Kitsap too, and other, kind of across the region, see if they know of anything. And I do see there's another question in the chat that's, if you currently have a farm with a mortgage from a credit union, would one of these programs offer an option to transition out of a bank?
Well, Lion certainly would. We are sort of a non-traditional way that members can help local entrepreneurs.
Oh, Jessica, I think, yeah.
Yeah, I'm not, sorry, I was muted. Similarly, it would just be like a refinance. So you would go through an underwriting process just to look at your farm and operation and the collateral, et cetera, and go from there. Interest rates are high. It's tough right now for everyone, but we've, as I mentioned, Acquisition does have lower interest rates, so it can be worth taking a look at.
I would say, like I explained in some of the other borrowers, Craft 3 is more of a intermediary before a bank. So if you have a credit union loan, your rate might be better than we're able to offer. And I'm guessing an AgWest or another larger organization has better rates. So we probably wouldn't be an option in that case.
And I might also add that most of the Lion loans are somewhere around 5%. So again, if you can look for a local source of lending like Lion, that may also, and again, I'm not sure what the Craft 3 or the other loan interest rates are.
With FSA, to refinance real estate, if that's what the loan was taken out for, was to buy ground, we would be looking at a guaranteed loan, which would be through a commercial lender. We've done a lot of those through AgWest, as an example, but there's other commercial lenders that we can work with as well. That could be an option. We do have real estate loans ourselves as well, but those are just for purchasing or improving property. And unfortunately, we can't use those to refinance ground. But with a guarantee, that could be an option.
Yeah, again, once again, I want to stress the importance of affordable housing. I'm not sure what the problem is like in other parts of Washington State or Oregon, but it's just terrible out here in Jefferson County. and in other parts of Washington State, I know. And so, yeah, workforce housing efforts are just critical for farmers as well as all small business. Well, all businesses don't have to be a small business to have trouble finding houses for your workforce.
Absolutely. And I think that goes hand in hand, with the investments Karen made, and in order to, not just increase efficiency, but also like reduce the wear and tear on her employees. You want your good folks to keep coming back. So they need a place to live and they need to be able to work without injury. So thank you all for that feedback. Anyone else have any other questions? And just want to call out that Kelly did drop the link for the evaluation in the chat again. So if you have a moment, please fill that out. And otherwise, we'll go ahead and give you all three minutes back in your evening and say thank you again to our speakers. Thank you all so much and have a good evening. Bye.
Thank you.
Bye.